Growing legacies.
Welcome back. You're still with us here on Markets Today. Talk back. The market ending up seeing a bounce finally. Sanjeev Bhasin and Mitesh Thakkar are our guests, and they've been sort of answering questions that you've been sending us. We got through three of the top stories of the day, so let's move on to the fourth headline. Debt hit Dewan Housing Limited soared in trade. It ended a whopping 32% higher. This after the company submitted its draft resolution plan, which dictates that its creditors won't have to take any haircut on their principal exposure. Yes Bank and Indiabulls Housing also rose in tandem. However, sources say that the lenders believe that they will have to take at least a 30% haircut in various ways. Lata, I mean, you've broke the story late towards the close of the session.
Yeah,
what do you make of it?
The
proposal.
Company has made it very clear that none of the creditors have to take a haircut on their principal. So, that means that obviously interest will have to be foregone. As creditors see it, there are three buckets in that 85 to 89,000 crore of loans, of which 35,000 crore pure retail loans, very good, standard, no problem. Then there is a 15,000 crore of mortgage builder real estate loans, but they're good loans with maybe a little bit of rolling over by 1 to 2 years, 3 years. Those loans will come good. But there you have to take a minor NPV hit, net present value hit. The third basket is this, the one that Cobra Post allegations, SRA,
which is the other 35,000.
Slum rehabilitation. 35,000 crore, they think that, that'll have to be written out into 10 years, more money given in so that those projects come up. So if you take overall, the haircut could be as much as 30% in various ways. Some as net present value hit, some as a direct haircut. Now, just one more problem I'll leave you with. While insurance guys are also allowed to sign the creditor agreement, the mutual funds have not yet got that permission from the authority, that is SEBI. There, the mutual funds are obviously a disgruntled lot because they don't want to sign till SEBI agrees, because they were pulled up in a previous case, in the Z case. They are contemplating three kinds of action. One, go to court, in which case they could be bought out. That is the second option. Like, why don't the bankers buy them out at some suitable negotiated haircut? Or a third option, that SEBI agrees and they join in the
whatever is agreed
in the agreement. So we'll have to see how things pan out. But even one person taking the big ask on their part is that if the small debenture holders are going to get any munificence, then the mutual funds, they should be on the same level, because their investors are also very small investors. So, there is still that level of disagreement in the non-institutional creditors. Let's see how it goes.
Okay, so this is far from done in that sense. We'll have to track this. But the market sort of giving it the benefit of doubt, it had sort of cracked to what, 41, 42 rupees, so there was a bounce. Satish K has written in, he's got a question on DHFL. He has 308 shares of the company. His price is 160 rupees a piece. He wants to know, what should he do? Should he hold on or should he sell? I mean, even with the bounce we've seen today, it's a fraction of his purchase price. Sanjeev, what would you tell Satish?
Well, I think he'll have to hold it for a longer time if he wants to see some recovery. But in the short run, all the rhetoric will revolve around who the new buyer, how much capital Ion Capital gets and how fast these things can be resolved. They have got some moratorium on payback of interest, and that should hold good steady if they can sell off some of the distressed assets. But it's a long drawn battle how fast it can be done. If he's looking for a short-term return, I think he should use these bounces to get out and get into some quality name like an HDFC or LIC, or stay put and then wait for the resolutions to take place.
Fair point. Is there any point looking at the charts, Mitesh?
Sorry, which stock is this?
DHFL.
Not really, Lata. I think you will see, I think, some kind of throwback, which is what has happened today. But I don't think we have any accumulation or big reversal signals. I think the stock might go through a very prolonged base building period, and the stock might just be between 60, 65 on the upside to about 40 on the downside, which is what the recent lows was.
All right, fair point. On to the last headline of the day. Interglobe Aviation, the owners of Indigo, had a turbulent time in trade today. closing the day slightly flat at after its promoter spat appeared to prolong. Indigo chairman M. Damodaran has responded to co-founder Rakesh Gangwal's concerns over execution of agreed terms, saying that the airline will clear the new related party transactions policy. Anu Sharma with more details. Hi, Anu.
So first, let's start with the letter which was written by Rakesh Gangwal to the board of directors. In that letter, he says that first, the new policy on related party transactions should be implemented ahead of the AGM. And second point is that an independent woman director needs to be appointed at the board of Indigo immediately. And if the IGE group, the Interglobe Enterprise Group, Rahul Bhatia, opposes this resolution, then SEBI should intervene and they should appoint the independent woman director for Indigo. As response to this, M. Damodaran, who is the chairman of Indigo's board, he has said that these issues regarding the new RPT policy, that will be taken up by the audit committee, which will meet after the AGM. It will be